So just to be completely honest with everyone, I hadn't looked at JP Morgan a whole lot before doing research for this video. And I am really, really shocked by how much I like this stock. I like doing these videos. I like talking about stocks. I like maybe showing people my perspective on things, maybe revealing a few stocks that you weren't looking at. But another advantage is it helps me be on top of my own research for stocks. And I'm just sitting here doing this. I'm like, I like this a lot. I like JP Morgan right now. I think it is very, very, very cheap. It is very difficult to find companies that have all the things I like to look for. I like to look for growth, preferably matching the S&P 500 or better. I like PE ratios that are within a reasonable range. We absolutely have that here. I like dividends. I don't need them, but I like them because that's, even if the company's going sideways, it's stable, income coming in. It's something you're still getting back from the stock wall, even though you're maybe not necessarily getting returns, right? And we have all of that here, right? We do. So over the last 5 years, it's about performed the S&P 500 a little bit lower, but also the dividend is higher. So it's roughly even. But if we look at the 10-year record, maybe the 2000 record, so the last 25 years hasn't been great, but since 2014, which I like to look at, usually 5 and 10 is a good metric because so much changes over a 15, 20, 25 year period. If you have the track record back that far, that's good, but it's not 100% necessary. So since 2014, right, as a bank, which banks do not perform well. You look at all the top banks. I'm talking about large banks, maybe not regional banks. I do not really look at any regional banks. But if you look at Citibank, you look at Bank of America, you look at Wells Fargo, even Morgan Stanley, which I like a lot and own a good amount of. I know they're more of a on the investments banking, but they're still a financial institution. Banks do not have great returns. They just don't. Since 2007, most banks do not provide good returns. Since 2014, this stock has well over 3x. So it's outperformed the S&P 500. The dividend was better, and you're getting that exposure to financial institutions, which diversification is good because you never know when if you just hold tech, maybe you'll have banks or utilities outperforming. More recently, like if you look at utility companies and REITs, they've done very well since rates have been expected to drop. So, and I've done very, very well on my REITs and my utility companies, even though tech basically since, the last 6 months, they ran up good. And let's say the last 3 or 4 months, more accurately, my tech has not done as good as all of those other ones. Now, are you going to do better in the long term if you're 100% tech? Probably. But I mean, diversification is good, and you don't want to be all in on one industry, likely. Because then when one industry is outperforming, you can shuffle some money and you can, get dividends from these utility and REIT companies. I like those as well, right? Now, maybe you don't like that, but I personally like to do that. Excuse me. And this is a financial institution that has outperformed the S&P 500. A large company. This is a $634 billion market cap company. This is one of the largest companies in the entire planet, and it's not even, it's not even that close to not being that. So, I mean, the forward PE too. Let's take a look at that. Yeah, it's a little bit more sideways, right? But they had an insane quarter two, just insane. So, but even so, you may think this is incredibly cheap. It is cheap, but usually these large banks trade somewhere in between, 11 and I believe Morgan Stanley is at about 18 PE. So this isn't incredibly low for the sector, but it is on the low side, right? So this is a cheap PE. It's on the lower PE spectrum. It's outperformed almost all the competition. Morgan Stanley's done well. I really like Morgan Stanley, and it's outperformed the S&P 500 in a sector that usually doesn't, right? Like this is screaming cheap. This is screaming buy. And obviously this is not investment advice. You guys form your own opinions off of the information I provide, and please do your own research. However, This is a buy so much so. If you gave me, money to invest today, which the way I invest money, maybe you guys do weekly. I prefer to do lump sum every couple of months or so, right? So I put money in last Monday. So unfortunately, I'm not going to have funds for a long time. However, if you slap that money that I'm going to invest in a couple months, you give it to me today. I am absolutely today buying JP Morgan at this price. Now, it's run up a lot, yes, but it's really not that undervalued. And like I said, this may not be a company that is going to keep outperforming the S&P 500. Maybe it's going to run sideways for a while. But at the very least, this is a company that has proven a track record of performing at a high level that banks usually do not. The dividend is great, or it's not great, but it's solid, 2.22. And if you expect it to run sideways or down, it's probably only going to get better, right? In that worst case scenario. I'm struggling to find anything super negative. I mean, the negatives would be generally, financial institutions and banks do not outperform the S&P 500. However, this one has in the last 10 to 12 to whatever. Has it outperformed probably since 2009, but probably since 2012 it has, right? I don't know. We're not going to look at that. I'm pretty sure since 2012. So let's just say the last 12 years it has outperformed the S&P 500. Like that is great. But I mean, you get, if banks get hit hard in a recession, some banks start failing, it could drop significantly. Like there is risks with that sort of thing. Banks don't get a lot of love. Generally, they have strong financial regulatory constraints, which is not necessarily a bad thing considering 2008, 2007, that whole fiasco. So, but I mean, man, this stock, it's just looking great. It really is. So, Schwab likes it a lot. They think it's going to be in the top 12% performing stocks over the next year. They reiterated that 2 days ago. So, do I think it's going to perform that high? Probably not. I mean, I don't know. I don't like to look at short term. I'm a long-term investor. I don't know. I cannot predict the future. Who knows where the market's going to be, but I just look at the picture of a stock and how it performs and where it's valued now. And this it's basically hitting a 4 or 5 out of 10 in every key area. 2-star, wide, I agree. $600 billion bank has a large moat, right? 4 stars, buy. Long, buy. Decent ESG score, whatever you think of that. Dividend, getting hiked. I mean, they've hiked it twice. Well, they're expecting to hike it in Q4. But they're expecting to hike it twice in the last year. That's great. Let's take a peek at Schwab. Decent amount of people are saying hold, which, I mean, with the run-up, I understand that to some degree. Like, it has run up a lot over the last year, and I don't want to discount that. However, if you want my opinion, generally, how much it's run up is irrelevant relative, if in the long term, if you're looking at everything else, right? It is a factor, but, I mean, it's an extreme example. Oh, you're like, oh no. Yeah, I know. It's a really weird graph. So, right, you see this right here, the 43, 47, 40. And I'm not trying to say this company's anything like it, but people were saying it ran up so much from here because it did. I mean, it basically doubled in a couple months. And look what it did. It ran all the way up. Now, is JP Morgan going to do that? Absolutely not. I'm not saying that. However, I think how much it's gone up is irrelevant to the other factors. PE, how much it's performed, or the track record, history of performing, the last 5, 10, 12, 15 years, right? History. Things can keep running, right? We see Tesla. Remember when Tesla in 2021 was like 280p or something like that? They're still way below that. So, and people are saying it was overvalued well before it ran up that high. Like, well before it ran up that high. So now I'm not saying that's what you want for this company. I'm not saying that at all. But I think how much it's run up is generally irrelevant because companies can do very well or were significantly undervalued, whatever it may be. That's just how the market is sometimes. So, but anyways, I'm starting to get a little bit in the weeds. If you like this video and made it this far, I'd really appreciate if you left a like, subscribed, or commented, anything like that. It helps the channel out a lot. It really does help the video out when someone watches the video and leaves a like. I see it in the analytics. You can literally see the correlation. Certainly with a channel as small as mine, it really helps push the needle a lot. So if you did enjoy the video, I would appreciate if you like, subscribe, whatever you, all that sort of thing. So anyways, I just appreciate you for watching the video, and I'll catch all of you next time. See you later.